All right, right now, folks, as we do each and every Tuesday and Thursday at 30 past the hour, we talk to Tim Ord. You can reach Tim at his website, ord-oracle.com. You see Tim right there. And over at TFNN.com, under the Services tab, the secret science of market tops, how to identify market tops, and 6 secret ratios every trader should know. And we talk about some of those ratios here, as I say, when we talk to Tim. Tim Ord, good afternoon.
Good afternoon. So I'm bullish here. I don't think anything's starting to the downside. If you pay attention to the ticks and trend earlier today, probably an hour and a half ago, the trend was around 1.4 and ticks were like 300, 400 down. And that was showing panic. And yesterday we had a trick. This is not on my charts, but yesterday we did have a trend close of 1.26. Day before we had a 2-and-1 downtick reading. That's a bullish combination, what I call it. And that suggests the low will form as early as the day of the readings, which would be yesterday to as late as 2 days later, which would be tomorrow. So we got panics in the ticks and trend. But the first chart I want to show you, this is a weekly. The bottom window is the SPX VIX ratio weekly. The next week, or the next higher window is weekly SPX. And if you look at way over to the right, actually get my drawing tool here. If you look over here, we actually have not touched a new high yet on the SPY. But if you go down to the bottom window there, over in the right-hand corner, the SPX VIX ratio made a higher high. Kind of a similar thing happened back in, this is a weekly chart, but back in 2022, the SPX VIX ratio is making basically higher highs, that the SPX is making lower highs. That was predicting at some point the S&Ps are going to make higher highs. And that's exactly what happened. We have the same kind of a setup here. What I'm saying is the SPX VIX ratio leads the SPX or SPY. So, but this is on a weekly chart. So that's kind of a little bit bigger time frame. We can get down to a little bit smaller time frame here. You can see this is a daily SPY. Next one, higher window is the SPX VIX ratio. You can kind of see it there. You can see the SPX not hitting a new high, where the ratio is obviously hitting a new high. So even though we pulled back here, I think it's just a minor pullback. What I want to point out here, we did have a big, this decline right there was kind of a selling climax. The weeklies don't really show it, but anyhow, after selling climax, you got to have a sign of strength, and there's different ways of sign of strength. You can have an advanced decline sign of strength. You can have a volume sign of strength, and there's probably even another one, but those are kind of the main two. And what I want to point out, we did this kind of a Zwag breast thrust indicator type thing, and Zwag depends what your interpretation is. Some say they did get a Zwag breast thrust indicator triggered off of the was that November low or October low, and I'm thinking there's some evidence that probably did happen. This one's a little bit different. This is a 5-day average of the advanced decline, and it has to get below 0.7, and it has to rally to 3.0 within 10 days, which is basically 2 weeks. And to get down to below 0.7 on advanced decline, that's kind of showing a lot of panic. And panic's really good. Kind of helps you define what the market's doing, because once you get panic, you have to have a sign of strength after that panic. If you don't get panic, you're going to get more signs of weakness, and you'll continue to get signs of weakness until there is a sign of strength. And what I want to point out, there's a sign, this is off the April low. We did have a sign of weakness or a panic bottom. Then right after it, it was a huge sign of strength. The advanced decline went way up to 0.45, needs to only get to 0.03, but that was a major sign of strength off that bottom. We have it here too. We have a sign of sign of weakness, then it has to turn around and get a sign of strength. We've got those parameters coming off the last low. So this is more or less a confirmation that this rally's not done yet. We haven't even hit above the previous highs yet, but according to the sign of weakness to sign of strength, this rally has further to go. And so we're going to break some new highs. I thought we might be breaking them quicker because we're into a seasonality bullish period right now. We call it the Christmas rally. It's supposed to start around December 14th, but it can be a little early, a little late. Maybe it's going to start today, but I bet it starts this week. And usually it lasts into, I think, January 4th or something. We're in a bullish sign of strength or a seasonality period. We do have a sign of weakness to a sign of strength, which is bullish, and we got a positive VIX, SPY or SPX VIX ratio thing. So there's quite a bit of bullish stuff going around here, and we're kind of just screwing around. So I'm bullish. I'm looking for new highs. Is this year going to be next year going to be good as this year? I'm not sure. This is midterms coming up, but on a short-term basis, over the next minimum 30 days, maybe 90 days, if we get lucky, the market probably will be favorable here. So we'll see how the cards play.
And it was quite an acceleration. I was just looking at the S&Ps, of course, when you were talking about that real sign of strength there. And I was just even playing with the numbers, Tim, and it's, the S&Ps and, of course, NASDAQ growth stocks, but even S&Ps, it was like up 6% in a little over maybe like a couple weeks or something like that. Quite the acceleration, right? Man, that's a lot of strength coming into December, and nothing kind of getting in the way of it just yet.
Yep.
What'd you think about Friday and any selling? The longer term, I agree, man. Did that catch you at all? We had a little bit of selling on Friday. I know you're bullish, but I was watching some of it, right?
We touched new highs and higher volume when you got this pullback over the last couple of days here, or 3 days. And that kind of surprised me, because normally when you start attacking previous highs and higher volume, the market never makes a top in high volume. It always gets tested at a minimum. And so that kind of surprised on this little pullback. But I don't think it's anything to worry about from the stuff I'm looking at. I mean, the VIX, we got panic. I was hoping we'd get panic on the pullback, and we did. Because if you don't get panic on the pullback, you're going to go down until you do get it. So, So we're getting it now.
I was just going to say, I mentioned Friday, but, one of the few red days in the market. So since November 21st, which is almost a full month, there's 3 or 4 other red bars on there, but really the only substantial one is the market's pushed higher.
Yep.
All right, folks, stay tuned. We're coming back with Tim Ward, and I think we're going to talk some gold. We'll talk some metals. Stay tuned. We're coming back. Welcome back, folks, and we got markets continuing to push a little bit higher right now. We are at session highs in the NASDAQ, up by 0.3%. You got the S&Ps negative by just 12 points, and you're up almost a 50-point run since about 1 o'clock. We're talking to Tim Ord. Don't forget, folks, you can reach Tim at his website, ord-oracle.com. There it is right there, and he's got a couple of great webinars under the services tab at TFNN.com. Check those out as well. All right, Tim, I see that next chart up there, and we're jumping into gold. Is that correct?
Yeah, it's just, I don't want to bore people with this chart, but you have to look at the bigger trend. And this is a trend going back to 1982. And I think there's a 12-year cycle going on. I don't have enough data points to really prove that point, but it seems to work up pretty well. And what it is the monthly XEU. I talk about this, I think, over the last month now, and people probably getting tired of me talking about it. But this kind of identifies what the bigger trend's going to do. And it's the XAU to NDX, in other words, gold stocks compared to the NASDAQ stocks on a monthly time frame, and I take the RSI. And when the RSI, in other words, when this ratio rallies really strongly, the RSI goes up with it. And before, the previous rallies got up around 50 and just turned back down. This one got up to 70. And that's initiation of an uptrend. And it's changed of character, they call it. But anyhow, once it gets above 50 in general, stay above 50 for a long period of time. Previous cycles lasted 12 years. Well, this one lasts 12 years, and I think there's quite a bit of evidence to suggest that. But anyhow, what that says is gold stocks are going to outperform the NASDAQ stocks over the next 12 years. It's boiling it down. That's what's supposed to happen. We'll have to wait and see if that actually happens. But you really don't want to shy away from the strength of these gold stocks reaching RSI compared to the NASDAQ stocks. So NASDAQ may go up, but gold stocks comparably will go up a lot faster, or a higher percentage, I guess you might say. So until that thing changes, in other words, if RSI drops for some reason down below 40, or even hits 30, that would suggest that scenario of gold stocks outperforming Nasdaq's going forward would not be true anymore, because now gold stocks are a lot weaker than Nasdaq stocks. So that would blow that theory out of the water. So in general, this RSI going forward in the coming weeks and years has to stay above 50, or in that vicinity. 50 is 49 close enough? Yeah. Is 39 close enough? I think that would be a sign of the gold stock rally ending. So anyhow, that's what I want to talk about. That. So that's what it keeps in mind. So you'll have consolidations along the way, and I think we might be getting close to one now. This is a Pring's inflation deflation ratio. It gets up RSI up around 60, which it did here on this last run up. But you can still rally a little bit more. There went up, probably another couple of months. There, it looks like it rallied a little bit longer. There, had a couple of months, maybe a month or two there. So I'm thinking we're going into some sort of a high, and we're starting and we did get a correction. Now we're back to the old highs. So I'm thinking we're starting to. It's not a topping process. It's a process where we're going into some sort of a consolidation. And I'm thinking we're heading into it. And here's, on a short-term basis, this is a momentum indicator. The bottom window is the daily cumulative advanced decline. This is a daily, so we're going down from a monthly chart. I think the last chart was probably a monthly chart too. Now this is down to a daily chart. So it picks out the minor swings and advances. Last time this thing gave a buy signal was back in February of this year. And so far it's still on a buy signal. But, what this is the daily cumulative advanced decline. And as long as that indicator stays above the mid-Bollinger Band, the uptrend's intact. The next higher window is the up-down volume, kind of same thing. As long as the indicator stays above the mid-Bollinger Band, the uptrend's intact. That would suggest NDX or GDX is in an uptrend. And so far that's what's happening here. We're kind of flipping sideways here. We did hit a new high in GDX. And so we're kind of, have we closed below the mid-Bollinger Band? No, we haven't. I'm thinking that we could still push a little bit higher, I think. That's what I'm kind of waiting for and actually hoping for. But if both those indicators do close below the mid-Bollinger Band, I'll be out of my GDX position, maybe for a month or two, I don't know. But it could be a consolidation, so that's what I'm thinking we're heading into. But, we could go up to 90, maybe 95 before those two indicators roll over. So I don't know, maybe it's rolling over right now, but as we're talking, they haven't. So I'm kind of staying with that long GDX for right now. And so I'm kind of being patient. And so when gold stocks are going up, you're talking about inflation and stuff. And here's one indicator, or here's one, this is it's an ETF. For some reason that fell off. Let me get my drawing tool here again. All right, there it is. This is the commodity index. So you're talking about lumber, you're talking about the precious metals, you're talking about pork bellies, you're talking about corn, wheat, all the commodities. And what I want to point out is inflation is going to be probably really bad going forward here. But this is a William O'Neill's cup and handle pattern. There's a cup. It's kind of hard to read. The handle is this thing going sideways here. And the narrower that handle is, the more powerful that move becomes. So if this thing got all the way down to 61.8% retracement, which would be around $15 on this thing, that would be not as strong. It is pretty much has stayed at 38.2% retracement and higher. And it's got really a tight range in here. It's kind of hard to see it. But the market is actually starting to hit higher highs and higher volume. You can see it down there, and it's real narrow trading range. What that is doing is like pressing a spring down. At some point, it's going to spring up, and it's going to be just a rocket out of here. And when does it start? I'm along this thing. I'm at, I don't know, 23 and a half. I think it's 22 and a half right now, so down about a point. But at some point, this volume is going to keep increasing, and you're going to start breaking out to the upside. And the path from here probably to these old highs back here are probably going to be fairly short. In my opinion, I think you could reach that next year. This is a monthly chart. So this chart goes back to 2009. So are they going to be as good as a gold stock? Maybe. My point is that kind of reinforces the gold stocks and the gold going forward, because if these commodity prices break out to the upside, which is inflationary, that's going to fuel probably gold price along with it. And in general, if gold goes up, gold stocks are probably going to go up with them. So anyhow, what I'm saying here, this kind of reinforces the gold run going forward. So,
and on top of that, the dollar. I mean, we hit the lowest level in the dollar. We're back above that we had hit since like the beginning of October. So 10 weeks, and we're at 98.14. So that kind of lines up with that same deal, right? The dollar weakness, commodities trading higher. We got crude at $55. Steve, Tim, great stuff as always, man. I appreciate it. We look forward to talking to you on Thursday.
All right. Thank you.
Thanks so much. Folks, check them out, ord-oracle.com, and those great webinars under the services tab. We're coming back for one more segment.